Hi everyone, Leo Marenga here with Good Story. I'm here with Dan Salhany, manager at Remax Hallmark. We're here to talk about a few things, but first and foremost, thank you, Dan. One thing that we wanted to chat about is one of the most frequently asked questions that we get as realtors is, should I buy now or should I wait?
Yeah, no, that is definitely. Thank you so much for having me on your podcast here. It's always a pleasure to participate in anything that the Good Story team does. You guys always do it with such high regard and such high quality. Yeah, it's a great question, and it's the one that we probably have been hearing for the last 18 months most frequently. Is that, and our interest rate's going to drop. One thing that we can look back on is data and history and historic data and that type of thing. And everything goes in cycles, Leo. You know that, and we went through such a great period of time where interest rates and money was
Free.
Essentially, ultimately extremely cheap and inexpensive. And we're not at that point. But if you look at the average rate of where we are today, and then take the average over the last 25 years, we're sitting right in the sweet spot of where the average interest rates have been. Prices have also pulled back, right? We know that from where they peaked out in 2021.
March 2022.
There you go. We've had a little bit of a pullback on some of the values. Some areas are starting to bounce back. Like I think in the urban marketplaces where we don't traditionally see a lot of inventory, so the Alta Vistas, the Westbros and so forth, those markets seem to be a little more insulated to what happened. The suburban markets definitely have more opportunity and more inventory just because there's competition with the builders.
More supply too, right? Yeah.
But there's more supply. Now, the one promising thing or the one good thing is that, and I'm very, very happy with a lot of the builders in our city, is they haven't gone running, where they've not gone into panic mode and dropped their prices to like extreme lows. They've had to make some adjustments to obviously move their inventory, but they've taken into consideration what other people that purchased 2 or 3 years ago paid for their homes, during the more robust marketplace. So that's been really good. Some of the builders are offering some great incentives as well. I encourage anybody to reach out to their realtor, even if they're thinking about buying a brand new home.
Yeah.
It's interesting. We just one of our associates, I can't mention any names, but just negotiated on a builder that had adjusted their price on their home by about 13%. It was a pretty high-end property, and we thought it was like that was the rock bottom, but actually we were able to go in and additionally negotiate another, it was almost about $80,000.
Wow.
Off of the asking price. So there are some builders with inventory homes and so forth that are motivated. It's just about understanding how to navigate with the builders and find the opportunities. And I think that's what a lot of our realtors are doing. Exactly.
That's it. Yeah, that's fantastic. And also, you had done an exercise also with one of your mortgage broker partners, right? Maybe you could tell us a little bit about that. One
of our partners at TD shared this with us at a meeting this week. And they did a comparison. I think the property value was $750,000 at today's interest rates, compared to if rates increase by 5 to 6%, let's say in the next 6 months, should the market take off, which will more than likely happen if home
prices increase 5 to 6%.
So they did a direct comparison on a 3-year term mortgage. Where would the consumer be buying today at today's price with a little bit of a higher interest rates, as opposed to waiting and potentially taking the risk of an increase in value, but getting a lower interest rate? Where will they be at the 3-year marker? And the diagram, or the sort of schematic of what they put together, showed that the prospective buyer would be ahead of the game by $23,000 in principal pay down over waiting and taking the chance that prices go up should interest rates go down.
Wow, and that's on a 3-year.
That's just on a 3-year, like in 36 months. So, I guess our advice or our conversation with a lot of the buyers that we have today that are sitting on the fence is, don't look at mortgage rates from one dimension. Don't look at buying from one dimension. Actually sit down with your realtor, actually sit down with a lender or lender professional that understands the ins and outs and has diversified products to offer you. And really can sit down and create a formula as to, Schedule A looks like this. you wait. Schedule B looks like this, and ultimately then you can make an informed decision as to what makes sense, because we're seeing it. Leo, like, you guys are doing open houses and you're showing properties. What's the flow been of, market consumer traffic at those properties?
I think it's a lot higher than what we saw last year. Like even during the same time last year, we're seeing a ton more traffic, like not just open houses, but sales volume. Like if we look at sales volume from 2023 to 2024, just April alone, it went up almost double digits. It was like 9%, give or take. I think at 8.9. And that's a lot of traffic, right? That's a big increase. And it's not like the beginning of last year wasn't that slow. It was not until the end of 2023 that we saw a really big slowdown. After the June and July rate increases, that's when we saw things really cool down. Right. So last year it wasn't that slow at the beginning, and we're still seeing an increase from there.
Well, there's so many cycles, right? When there's change in the market, you've got the shock. Then you've got sort of several different tiers or several different series of what people's emotions and their buying process and how they think. There's the shock, then there comes the process of pulling back, and then there's acceptability. And I think that's where we are, and that's where we kind of turned the corner going into 2024, where consumers actually sat back and said, okay, we get it. We need to make a move, or we want to make a move. This is where interest rates are at. We need to maybe adjust what we want, or, our budgets and that type of thing as to what we're going to end up in. And we're seeing that both in the entry level market, where people are buying their first homes, all the way into, the sort of the luxury end of things, and the luxury part of the market, where there's homes that are $1 million plus. So there's definitely been a confidence that's definitely been created over the last 4 or 5 months. And I think that comes a lot from, especially here in Ottawa, being capital city with, job stability, our unemployment rate is low, our average income is still quite high. And just with all the stuff that's happening in our infrastructure, I mean, I don't know about you, but everywhere I look, there's cranes in the sky.
Yes, definitely.
There was a great article in the Ottawa Business Journal. I think it was this past week, and I'm not sure if you had a chance to look at it, but it talked about redevelopment on Blair Road of, I think it was the Telesat building. There's a big redevelopment that's happening there for residential properties. There's a massive undertaking that's taking place in the Canada ward.
Canada is huge. Canada is showing a lot of confidence, especially that corridor, like the tech sector there. There's a lot of big players, not just local actually. So you're getting money from out of town that's coming, and they're putting a massive development. Like we're talking
for sure
30 stories, 40-story buildings.
Well, it's actually going to be a community.
It's an entire community. It's like a 10-year. It's like a 10-year development.
Yeah. So basically, in areas this developer who developed a great deal in Toronto and did a lot in markets like Mississauga and that type of thing. That's what they're going to do here. They're basically creating villages in small geographic areas that are somewhat self-sustaining, where you'll have banking, you'll have restaurants, you'll have cafes, you'll have shopping, you'll have all of that stuff. Generally, in the areas, the remote areas where you're residing.
And I think that's a testament to where the sentiment is, right? Not just from buyers, but also from investors, right? And I find that when you see that investment coming in, that confidence, right? It just kind of trickles down throughout the entire market, buyers, sellers, etc. And that's what we're seeing right now. So with all the excitement that's happening right now, both on the selling side, the buying side, the investor side, that confidence and the projections for Ottawa, due to its diversity, location, demographics, etc. I think transit. I think the future's pretty bright. I think we are looking at a pretty healthy real estate market overall, more balanced than the last few years for sure. If you have any questions, if you're looking at making a move today, in a year, 5, we're happy to help out. We're happy to journey with you. Feel free to give us a call. Reach out anytime. Thank you.
Awesome. Thanks for having me.
Thanks a lot for coming, Dad.
Thank you.